Morning.
What do you think of what Bernanke had to say?
Well, it was pretty much in line with what our economists in the US were thinking. A moderate downgrade of growth for this year. The surprise really was a downgrade for next year as well. Bernanke was highlighting not only the slowdown in consumption on the back of the rising oil prices and the disruption from the earthquakes in Japan, but also mentioning that the recovery is probably going to be weaker because of the deleveraging. And that's a change of tone from the chairman. And then on top of that, we had comments about core inflation being removed and generally the inflation tone was a little bit more hawkish. So in general, a bit downbeat, which is not surprising that the market's softening up a little bit today. In line with what most economists were expecting, though.
Okay, and he also said job growth, he says painfully slow.
Yes.
In his words, housing. Well, that's still an issue? Yeah,
if you go back, we've looked back to the late 60s at every major recession and recovery in the US, and the recession in 2008 was the deepest one since the Great Depression, and yet for the first 4 quarters of the recovery, it tracked in line with almost every other recovery, driven largely by the rebound in inventories and trade and investment. The last 4 quarters, though, the recovery has started to flag, and this fits very much with a lot of academic work looking at financial crises and the aftermath, showing that typically growth does come back, but it comes back at a slower pace. And this is what we saw in Asia after '98 as well, in South Korea and in Thailand and in Indonesia. None of those 3 countries managed the growth rates that they achieved in the 90s.
Okay, well, let's also talk about the debate over QE3. And most economists and analysts I spoke to this morning said, well, I guess it's a wait-and-see approach right now for the Fed. But what is Barclays pricing in? Are you guys expecting a QE3 package sometime in the future?
Our US economists are fairly downbeat on the prospects for QE3. They feel that the rise in core inflation that we're seeing and the general rise in inflation more broadly limits the Fed's options. It was much easier to sell QE2 when you had an environment where growth was softening, employment gains were almost zero, and core inflation was low. And we don't really face that scenario now. So is it a possibility? Absolutely. Is it on the cards? Maybe. Let's wait and see.
Yes, that is a typical answer so far. Okay, so let's also talk about what he had to say in terms of not knowing what's causing the slowdown. He says we can't pinpoint precisely why the recovery is slowing down. You know, as a Fed, you don't know what's causing this slower recovery?
Well, we know what's causing some of it. We know that there has been significant disruptions to the supply chain, particularly for the auto sector from the earthquake in Japan. We can quantify that to an extent. We can also quantify to an extent the slowdown in personal consumption spending on the back of the rise in energy prices. What we're struggling to quantify is the impact of the deleveraging effects in household balance sheets in particular, which is still going on. We also can't quantify why businesses are holding enormous hoards of cash and simply aren't investing the way they normally would have. So there's clearly been a shift in psychology.
That's interesting.
And this is typical for these types of recession recoveries where you've had a financial crisis.
Okay, well, Peter, we have about 45 seconds here, but for this summer, what kind of summer will it be in the markets?
I think it's going to be a nervous summer. We're going to be jumping at shadows. We haven't seen the resolution of the Greek issues. US data probably will improve. Sentiment is very fragile, but positioning and risk is extremely light. And that would suggest to us that there's not a lot of downside unless the news flow deteriorates substantially further, which we're not expecting.
And that would include what's happening in the Eurozone, I suspect.
Yes,
okay.